Brooklyn Mad Money. Welcome to Cramer, America. Other people make friends. I'm just trying to make a little bit of money here. My job is not just entertainment, to educate, teach you. Call me, 1-800-743-CNBC. Tweet me at Jim Cramer. I'm going to say it even though it sounds ridiculous. This stock market rallied today because we didn't attack Greenland. We didn't send the 101st Airborne into Copenhagen. President Trump said there ain't going to be no war no more and even promised not to hit our allies with tariffs because he, quote, formed the framework of a future deal, end quote, with the Secretary General of NATO. He's optimistic it will happen and will no doubt, I think, be the best deal ever, even exceeding the Louisiana Purchase. You really can't make this stuff up, can you? Yet it's the truth. As I was waiting to get on TV this morning for Squawk on the Street, the stock futures were weaker. Step by step, inch by inch, they were growing down. Then President Trump spoke, sounding like a man of peace. And then the stocks roared. As I turned to my colleague, David Faber, and I said, Greenland invasion ruled out. Here comes the futures. And that's exactly what happened. It's insane, people. It really is. But the market only finished up today. Dow rocketing 589 points. S&P closing up 1.16%. NASDAQ finishing up 1.18%. As war was tabled, and then a framework for Greenland occupation seems to be in the offing. How the heck did we get to this crazy point? At first, I like to play with an open hand. Let me just say I hate talking politics. It's not in my area of interest or expertise. It's way too polarizing. For most of my professional career, politics didn't really matter. Regulators could matter. Budget deficit could matter. Government shutdowns could matter. Most of the time, though, the president doesn't have much impact on the stock market, at least not on a day-to-day basis. The last president rarely got involved in the markets, except when one of Biden's aides drew up a list of our friends to determine which companies could get NVIDIA's latest chips. His regulators tried to block virtually every merger, too. But the White House itself wasn't regularly moving in the market. The White House, see this? They were oblivious to this place, believe me. Even in President Trump's first term, he didn't directly try to move the averages, except when the economy froze up during COVID. This time, though, Trump, too, is so different. It's crazy. From trade policy to tax policy to capital return policy or military policy, ramifications to the stock market are more important than anything other than the direction of interest rates, both the long rates set by the bond market and the short rates set by the Fed. And remember, Trump wants to set those, too. There are huge stock market reverberations to almost everything this president does, and I think he knows it. I remember when he called the bottom after Liberation Day fracas, literally by posting on True Social that it was time to buy stocks, a great time to buy. David Faber and I were on the desk trying to figure out dispassionately what could happen. Well, it turned out the president was right. It was an amazing buying opportunity. Which brings us to the Greenland imbroglio. The president has been stewing over this Greenland issue for a while. We have a lot of history with Greenland. There's a huge U.S. Air Force base built during the Cold War. It's very important to our nation's defense. Some might argue that we should have sovereignty over such a critical base. But Denmark's a member of NATO, and we run NATO. Until very recently, it might as well have been on U.S. soil. But this president doesn't respect Denmark or NATO, for that matter. He seems angry at the whole of Scandinavia because he lost out on the Nobel Peace Prize. Look out, Oslo! Enough of the history. Yesterday, we were concerned that Trump might decide to take Greenland by force. The notion that we would actually go to war with our allies over Greenland, of course, was totally absurd. But because this president is willing to use pretty much anything in the U.S. arsenal to get his way, from tariffs to bombings and kidnapping world leaders, sellers took control of yesterday's session. They were scared. Normally, you expect interest rates to go down as people seek the safety of treasuries. Not this time. NATO members own about $3 trillion worth of U.S. bonds. Why they would hold them if they're worried about the United States declaring war on them? No, not going to happen. So sellers swarmed in, dumped treasuries ahead of the pending U.S.-Denmark war. When rates shot up, we saw a frantic move out of high-priced to earnings multiple tech stocks, as well as anything related to housing. That was really yesterday's market. The latter is brutal, by the way, because there had been hope that the president was going to authorize buying mortgage-backed bonds to bring down rates. Yesterday looked like that looked like a goner. So even though D.R. Horton, the largest home builder, reported a pretty good quarter, stock got crushed. That was on Greenland. Today, though, we got to take the Greenland worries off the table, not just the possible invasion, but also the threat of tariffs, and Horton then screamed higher. So did Home Depot, which jumped $9.53, or 2.5%. That was the Greenland peace dividend. Of course, not everything went right from the stock market's perspective. The president's also decided to prohibit corporate home buying, something he thinks is needed to get housing prices down. He signed an executive order banning it. Of course, I don't think he has the authority to do that. But like with the tariffs, neither Congress nor the court seems willing to push back or even care. And he reiterated the 10% cap on credit card interest rates, something that I believe would be an economic disaster because the credit card industry would just stop lending. J.P. Morgan's Jamie Dimon told us that. Still one more area where the congressional action is needed, but you go tell Trump that. I'm not going there. In this world of presidential intervention, you need to know two things. One, the president is the best bully pulpit in the world. And two, he can go to war, but the war only ends. Tonight, we have Joe Wolk, the CFO of Johnson & Johnson, giant pharmaceutical company. The president ran, among other things, on lower drug prices, and then he got them. He also ran on reshoring, got that too. Then it ended, and these drug stocks have had a sensational, well, let's say, run after the peace dividend. Joe Wolk will explain that to us. Is the president's bark worse than his bite? He certainly does a heck of a lot of barking. You can't help that. But you have to try to figure out whether the worst case will really come true. This time, the worst case was an invasion of Greenland. You have to ask yourself if the president's threats are too outlandish to really happen. In this case, the bond market rebelled, and because the president doesn't want to wreck the economy, he changed his mind. He's given you so many buying opportunities in this game of international domestic chicken since he took over that all you got to do is just got to wait for the hot ones and then do some buying. But what really matters here is that you never know when the president and his team are going to strike or what sector will be hammered. Only fossil fuels and the derivatives seem to get the president's unmitigated backing, unless, of course, they're unwilling to pitch in on that Venezuelan rebuild. So here's the bottom line. My goal in this show is not to judge, it's to profit. Unlike the first Trump administration, Trump, too, is far more comfortable taking the market down, not up. Just be ready. You should get plenty of good buying opportunities over the next 3 years. Heaven knows he sure seems to love to provide them. Why don't we go to Sargon in Hawaii? Sargon.
Hi, Jim. How are you doing? Nice talking to you.
Same, Sargon. What's happening?
I have a question about Barrick Gold. So it's two questions. Do you think it's going to go $55 or above? And what's your price prediction for that?
Okay, I like the new management of gold. Now it's called gold.com. But I really prefer you to be an Agnico Eagle. I am a gold bug. I do not trade gold. I own gold. If gold is down, I buy. If gold is up, I don't. Agnico Eagle had a big term today that was down. I think it'll be down again tomorrow, and I'm a buyer. I am a gold bug. Vince in Florida. Vince.
Good evening, Jim. Give me your opinion on JetBlue. Should I hold it or sell it?
I'll tell you, I had a pretty good trip the other day in JetBlue. When I was coming back from San Francisco, the people were really nice. I want to thank them for being so great. Do I want to own the stock? I think United Airlines is amazing. This guy, Scott Kirby, I'm like, he's like so smart. I mean, I got to tell you, that guy is dynamite. But you can't fly there just because the stock's up, but you can buy the stock. Whoa. Thimp. How about Gabe in California, please? Gabe.
Hello, Jim. Thank you for taking my call.
My pleasure.
You have, so I have this stock. You've been positive on it for quite some time. With the recent turmoil, what are your thoughts on DraftKings?
Okay, you know, it is incredible. I saw a downgrade of Flutter today. DraftKings, I'm waiting. Look, it's got to have these other states. It's got to have Texas, California, and Florida. It just has to. At this point, as long as it doesn't, the stock's not going to go anywhere. I thought they would have, they'd be all on the ballot. I still think so. I don't know. It hasn't happened, and that's been disappointing to me, but it always could. All right. Unlike the last time around, Trump, too, is far more comfortable with taking the market down. You got to get used to that. I'm trying. Man, I tell you, as I mentioned, Johnson & Johnson's earnings were buoyed by positive news out of its cancer fighting division, along with an upbeat forecast. Sitting down with the CEO of the pharma giant and hear about the company's path forward. Ooh, do I like that stock. Then, as goes OpenAI, so goes the data center build-out. I'm taking a look at potential risk to the market if things go sideways for the AI behemoth. And aside from tariff turmoil, one of the biggest risks to the market is the supply of new stock. I'm explaining why that can be a bull killer. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.